Here's a summary of the Palo Alto Networks, PANW, Fiscal Third Quarter 2025 earnings call, focusing on key financial metrics, management forecasts, risks, highlights, lowlights, and important statements from the CEO and CFO. Overall performance and financial highlights. Q3 FY25 revenue. Total revenue reached $2.29 billion, a 15% year-over-year increase at the high end of guidance. Product revenue grew 16%. Total services revenue grew 15%, with subscription revenue up 18% and support revenue up 10%. Next-generation security, NGS, ARR, crossed a significant milestone of $5 billion, growing 34% year-over-year to $5.09 billion. XSIAM momentum. XSIAM ARR grew over 200% year-over-year, and trailing 12-month bookings are approaching $1 billion. It now has approximately 270 customers, with an average ARR of over $1 million. Platformization strategy. Saw strong adoption, with over 90 net new platformization deals in Q3, bringing the total to approximately 1,250 within their top 5,000 customers. The number of customers with multiple platformizations grew nearly 70% year-over-year. Large customer growth. 130 customers exceeded $5 million in NGS ARR, up over 40% YOY, and 44 customers exceeded $10 million in NGS ARR, up over 60% YOY. Gross margin. Total gross margin was 76%. Product gross margin was 78.4%. The company highlighted its U.S.-based manufacturing, which has mitigated tariff impacts. Total services gross margin was 75.4%. Profitability. Delivered 80 cents of diluted non-GAAP EPS and 37 cents of diluted GAAP EPS. 12th consecutive quarter of positive GAAP EPS. Free cash flow. Generated $578 million in adjusted free cash flow in Q3. Remaining performance obligation, RPO grew 19% to $13.5 billion. Current RPO was $6.2 billion, up 16% year-over-year. Management's forecasts. Guidance fiscal year 2025, full year NGS ARR, $5.52 billion to $5.57 billion, up 31% to 32%. RPO, $15.2 billion to $15.3 billion, up 19% to 20%. Revenue, $9.17 billion to $9.19 billion, up 14%. Operating margins, 28.2% to 28.5%. Diluted non-GAAP EPS, $3.26 to $3.28, up 15%. Adjusted free cash flow margin, 37.5% to 38%. Fourth fiscal quarter of 2025, Q4 revenue, $2.49 billion to $2.51 billion, up 14% to 15%. Diluted non-GAAP EPS, 87 cents to 89 cents, up 16% to 19%. The company anticipates an 80% collection rate for Q4 deals from previously booked agreements. Key themes and strategic drivers. AI imperative. The urgency for organizations to adopt AI is a significant driver for Palo Alto Networks. Customers are accelerating cloud migrations and seeking to secure their AI transformations. This trend is creating a demand for modern, cloud-delivered security platforms that can handle the scale and complexity of AI. Platformization strategy. The company's strategy of consolidating security architecture into fewer, more integrated platforms is resonating with customers, leading to larger deal sizes and improved security outcomes and operational efficiency. XSIAM as a game changer. XSIAM, Extended Security Intelligence and Automation Management, is highlighted as a key product, transforming the CIAM market and offering significant growth potential. Its ability to consolidate security data into a single AI-driven SOC platform is seen as a major competitive advantage. Network security evolution. Continued leadership in network security, with strong growth in software firewalls and SASE, Secure Access Service Edge. Prisma Access Browser is also showing strong adoption as a critical component of secure cloud access. Prisma ARS, AI Runtime Security. Palo Alto Networks is introducing solutions to secure AI transformations, including Prisma ARS, which helps discover, scan, and protect AI artifacts. The planned acquisition of Protect AI further strengthens these capabilities. Data as the foundation. The company emphasizes that security is fundamentally a data problem. Their ability to ingest and analyze vast amounts of telemetry from various sources is key to superior threat detection and the development of new capabilities. CEO Nikesh Arora, key statements. We continue to make progress on our platformization strategy while releasing a number of unique innovations in Q3 that set the pace for our industry. He highlighted the resonance of their strategy in simplifying security architectures in the age of AI. We crossed an important milestone of $5 billion in next-generation security ARR, up 34% year-over-year, delivering industry-leading growth at scale. This underscores the strong performance of their modern security offerings. The urgency to adopt AI is omnipresent in all of our customers. It no longer seems to be a choice. It's becoming a strategic imperative for every customer, as the risk of inaction is too high. This statement emphasizes the transformative impact of AI on customer priorities. Traditional IT architectures weren't built for the scale, speed, or complexity of AI. To truly capitalize on AI's potential, enterprises need modern, cloud-delivered platforms. This sets the stage for why their platform strategy is critical. XSIAM is not only our fastest-growing product ever, it is now more impactful to our overall growth rate. I believe that from a strategic perspective, XSIAM has the potential of being the game changer for both the industry and Palo Alto Networks. This highlights the critical importance of XSIAM for future growth. We see strong momentum heading into our fiscal year-end, driven by continued transformation, and we look for our first north of $4 billion quarter. This points to confidence in achieving their Q4 revenue targets. CFO Deepak Goleka, key statements. In Q3, total revenue was $2.29 billion and grew 15% at the high end of our guided range. This confirms the strong revenue performance. We surpassed the $5 billion mark in Q3 and ended the quarter at $5.09 billion in NGS ARR, a growth of 34%. This reiterates the significant growth in their core next-generation offerings. We continue to see increasing demand for annual payments, particularly deals over $1 million, but we are absorbing this transition while maintaining the high end of our fiscal year 25 annual adjusted free cash flow margin guidance. This addresses the shift in payment terms while reaffirming cash flow targets. Our total gross margin was 76%. Product gross margin was 78.4% in the quarter. This provides key profitability metrics. On an operating expense as a percentage of revenue basis, we saw 340 basis points of year-over-year leverage this quarter as we drove scale and efficiencies. This indicates strong operational leverage in their business model. For the fiscal year 2025, we expect NGS ARR to be in the range of $5.52 billion to $5.57 billion, an increase of 31% to 32%. This provides the updated full-year outlook for NGS ARR. Significant risk factors mentioned or implied: geopolitical volatility and tariffs. While the company's U.S. manufacturing mitigated tariff impacts, broader geopolitical discussions and potential supply chain disruptions caused some customer uncertainty in April, which could impact future quarters if instability persists. Pace of AI innovation. The rapid evolution of AI technology poses a risk of being leapfrogged. The company's strategy involves both organic development and strategic acquisitions, like Protect AI, to stay ahead. Competition. While strong, the cybersecurity market is highly competitive, with various players vying for market share, especially in emerging areas like AI security. Transition to cloud/software. The shift from hardware to software and cloud-delivered solutions, while strategic, involves managing the transition and ensuring successful customer adoption. Execution risk. Achieving ambitious growth targets and successfully integrating acquisitions requires strong execution from the sales, R&D, and operational teams. Highlights. Strong beat on NGS ARR growth, exceeding $5 billion. Exceptional momentum in XSIAM, demonstrating its market-disrupting potential. Successful platformization strategy, driving larger deals and customer consolidation. Positive leverage and improving operating margins. Successful management of tariff impacts through U.S.-based manufacturing. Strategic advancements in AI security with new product announcements and acquisition intent. Robust Q4 guidance, indicating continued strong performance. Lowlights. While not explicitly stated as a lowlight, the transcript subtly acknowledges a brief period of customer uncertainty in April due to geopolitical and tariff discussions, though this was largely navigated effectively. The increasing complexity of AI necessitates continuous investment and adaptation, which is an ongoing challenge. This summary provides a detailed overview of Palo Alto Networks' Q3 FY25 earnings call, covering their financial performance, strategic outlook, and key management insights.